hope I've actually started, but yeah, it's not a problem. I can go back into it. So let me start all over again for the sake of you. Can you hear me though? If you can hear me, just type yes or no. Yes, if you can hear me. Okay, so I know Damien can hear me. How about Jalil? I don't know if he can hear me. Jalil, I'm just waiting for your response to see if you can hear me or not. If you can hear me, do type. If you can't, let me know. Or is a message coming through Telegram better? Can you hear me at all, Jalil? I know Damien can hear me. All right. While I'm waiting for that, while I'm waiting for your response, I'll just continue. Okay. So having said that, this particular move, based on the psychologists of the traders are on this trade, the stops was triggered, and then we went back to a next level, which is this level. All right, is this level going to hold? That is what I am looking at currently. Let's look at an 8-hour chart. Okay.
Hello, I can hear you.
All right, oh, great. So what I'm going to do is I'll start from the beginning because I think, okay, so the one thing that I'm trying to show you is you need to be able to make a distinction on what kind of trader you want to be, all right? Whether you want to be a day trader, which there are different style of strategy that you need to employ for that, or you want to be a position trader, or you want to be a swing trader. All right, so because you work, I will advise that you should be thinking of being a swing trader rather than a position, rather than a day trader. A day trader is someone that will have enough time to glue himself to the screen and take opportunity as it arrives. Position traders are traders who will look into the history of price and then be making decision based on some key levels on the chart. All right, so I'm looking at this pound yen chart, and then for you as a beginner, there are certain things that you need to understand because each and every pair they move differently. Like this pound yen, one of my friends referred to it as Ferrari because it moves very fast and it does a lot of pips, right? And there are some other pairs that doesn't move as much, which might be the best for some people with other kind of personality. But let's quickly delve into this chart from the beginning. All right, so I'm going to be looking at this from a swing trading point of view, from someone that works point of view, and then be looking at it from key areas where you can be taking trade. All right, so this is the history of this particular currency. You can see that the major trend has been coming from this high all the way down here. So the trend in terms of the major trend is kind of down. You can see that this is the few questions that are sent to you that you need to be able to answer. You can see that this is the way in which it's traveling. All right. And that is on a longer term perspective, which means if you want to do anything on this chart and you want to align yourself in the direction of the trend, you will probably be looking to sell this for now from that longer term perspective. But let's look at where we are currently and how do we work with where we are currently. So the last thing that we saw is we have a significant move from here in that line of downtrend that started from that particular area and then make this particular low, which is over here. So what I want to do is I want to open the sheet on the price little by little so that at least you can understand what is going on currently. So the price can be moving down, but the current market condition may not be moving down. So you need to know what the current market condition is doing. So the major trend is down, but what is the current market condition? What we've seen is the price has descended significantly down over here, right? We move down, we create a correction, and we move down again. Then we create a correction, and then we move down again to make a new what? A new low. All right. So the trend on this one was down, but when you look at here now, we then move up, all right, and trade above this particular high, right? And that's created some kind of change for us, all right? That change is telling us that, oh, once you've moved up and then you move above the previous high, which is the particular high over here, it shows us that there's possibility that things want to go up because what we've done is we've broken the previous structure that was coming down. All right, so we put that into consideration. When this move up high occurred, the next thing that we saw is we moved down low. We traded below this high and we moved down low. But what we didn't get to do is what we've created is some kind of a higher low because we didn't take out this low. Okay, so we didn't break this one down. All right, so having said that, the one key thing about trend which you shouldn't confuse is if price is trending up, this is what you will get. You need at least a 3 point of reference, which is this first point, which is the low, and then where the price will stop, which is the high, and then where the price will retrace to, which is a low, which is higher than this particular low, all right? And then for the price to continue to move up, this means a trend is in place. This is a completion of a trend, and this particular trend that we are seeing is an uptrend, and each and every part of this uptrend has a way to approach it, okay? But what this has shown us is there's an uptrend in place. So when we transcribe the same thing that, oh, we move and then we trade above this high, telling us that, okay, something is happening, we've moved higher, and then we now come down to this particular low, because this low is what's it called, is lower than this one, and then we make this particular high. All right, what this is telling us is there's potential possibility for this to form this particular trend, which is to go higher. All right, there is that potential possibility because what we haven't done is we've not been able to break this low. So that is on a higher time frame. All right, despite the fact that the trend is going down, we are still seeing possibility that this particular trend, just because we've traded above this particular high, can be in a what's it called, in a scenario to go and create an uptrend, right, against the major direction. And that particular uptrend might be finding the stop or the end of that uptrend at this particular high. All right, so bear that in mind that currently, just because we haven't break this low and we are hanging with a higher low over here, we can be in a scenario of moving up. Okay, so I hope that one is slightly clear, right? If that is clear, now let's investigate where we are currently. the one thing that I want you to pay attention to is when we hit this particular low, let me hide this. What is price doing? We start to form this low, then we form a high, right? And then we form a higher low right over there, then we form a high, all right, which is still showing us that the trend is moving up. And then we form a higher low, and then we form a high, more or less like a triple top high, all right? So each and every trend that is unfolding, we have some kind of level of retracement, all right, which is when the price goes up, then it will come down over here. That is a retracement. Then the price goes up again, and then it will come down over here. That's a retracement. And then the price goes up again, then it will come down over here. That's a retracement. Okay, so currently we can say that we are seeing the retracement in pound yen, and that's the reason why I'm saying that we need to be careful with this move, not to confuse it for a change of trend, that because price is coming down, and then we now let our old buyers turn into bearish. All right, price is currently bearish, but it's bearish almost like a retracement in a move that is currently going up. So this is where we are. So I'm thinking potential possibility that we might hit a particular level over here and price will go up. So that is what we need to investigate. Where can we hit for any change to occur? So this has started selling off. We can hit certain areas for changes to occur. The key thing that you need to be paying attention to is this higher time frame. They go a very, very long way. Look at this point. When we hit this low, we come to this area, right? That is an area where we can see role reversing. What do I mean by that? This is an area where we hit and then price sell off, okay? But look at it, as we were going up over here, we hit this area, we encounter some sell-off. That sell-off is not as much as the sell-off we've seen over here. Then we break above this area, okay? If the price is not strong enough, then we won't be able to break above it. But now that we've broken above it, now we are retracing back. So this previous area that looks like it's an area where price can go above, it was a resistance over here. When price managed to go above it and price is coming back to it, it will turn to a support, all right? So let's bear that in mind. And then we are coming into an area of congestion at the same time as well. Look at all these places. This area can act as a stop for price to be going back up. All right, so we are creating some little ideas at the back of price, but the concept that I want us to look into really and truly is a concept of smart money, all right? And then I'm gonna explain that little by little. So we've had some key areas on monthly. This guy will end in 10 minutes, but I will try and continue after 10 minutes. Now we are moving to weekly. What I actually wanted to do is I want to bring you into perspective of how the multiple time frame works, okay? So the first key thing that I've done is I've looked into a monthly chart, which is key. You cannot just jump onto a chart without really understanding the whole scenario. So what we're actually doing is we've seen that the major trend is down, but currently the way the price is moving is moving against that major trend, all right, on a higher time frame level. So on this weekly chart now, which I have switched to, we are looking at the same scenario which we've looked into, all right? So, and what I'm saying about here is there are certain ways in which price moves. You see, when price moves like this from here to here, we didn't come back to all this area, all right? There is a reason why that hasn't happened. But when you look at here, when price gets to here, you can see that we are more or less like, we turn this place into an area where we found what is referred to as balance. Any place where you see price moving up and down like this, that means price is creating some kind of stability, right? And in some places it is range. Yeah, it can be a range, it can be consolidation, right? But This move from here to here is a move of imbalance, all right? And when an imbalance occurs like this, usually you find a reason for it to be corrected, all right? So just bear that in mind. Now let's look at here. We have a similar situation over here where price move like this from here to here significantly, okay? And then the next thing that we are seeing over here is a range is forming, just like the range that's formed over here, all right? And that range is correcting this imbalance or that significant move that occur. Okay, so we can be looking at this, and the sign of correction is when you're seeing price is not doing that one straight journey, just the way that I do over here, and it's coming is bouncing up and down. So it comes to this low, bounce back up. Now it's doing the same thing. So don't look at this last week move alone and be confused about the fact that most probably things are going down, okay? We are now in a range, okay? And then now we need to define the boundary of our range. And we are using this weekly chart to define that boundary. And how do we define the boundary of the ranges? We need to find out where price break out from, okay? And when you look at it, this is the last down candle that leads to this significant impulsive move. So this particular region, the high of this candle to the low of this candle becomes an important range for us. That is where price goes back to refuel and start to go back up, okay? And how do we know? Because when price comes down over here, we kind of find it like a demand zone and price push back up. So when price is approaching that area again, you need to be very careful because price can approach this area and turn around and continue to move back up because it has done that before. What that is telling us is over here, there are some key significant, very strong buyers that can give the price an opportunity to make a new high. And how do I know? You can see that when we make this low over here, then we make another high over here, and for a very, very long time, we find it difficult to break above this high because when we come down low, we make this high, we couldn't break above it. We come down low, we couldn't break above it. When we hit this high, then we come back to this area now, then we refuel. It's like you put more fuel in the car to power up, right? And what I'm trying to explain to you is the move that breaks the high becomes a very, very important move. The moves that break this particular previous high becomes a very, very important move. All right. So you have to understand that it's not every part of the charts that are the same. And when you look at it, when we come down here, this is the area where that move occur, and then we start to break this high. So let's say we break structure back up. So that area becomes a key area because that's the area where we are refueling, and that area becomes an area of more or less like a demand zone. This particular area becomes an area of demand. So let's look at it as a demand zone. So rather than looking at it as an area that price will just pass through easily and continue to go up, let's look at it as an area whereby price is going to refuel and gather some more buyers and continue to go back up. All right. So what that is showing us is we are not looking at things the way everyone is looking at it. We are actually looking at things in a smart manner, right? Everyone is looking at what has happened over here as a continuation to the downside. And you cannot trade successfully if you are basing the way that you are looking at price the same way that everyone is looking at it. You have to design a concept of looking at price differently than the way that everyone is looking at it, because in this business, 75% of traders fails, and the only reason why they fail is because of head mentality. Everybody is looking at the same thing that's a core, and then they want to jump on it differently. Now, instead of us to be selling, right, we are now thinking of buying. And why? Because this particular strong move that break this particular structure that was finding it difficult to be broken 1, 2, 3 times, right? Originated from here. So what that is telling you on the chart is the strong buyers came in somewhere around there. All right, having said that, we then look deeper into another time frame, let's say the daily time frame. And this is where you met us when you come in. So we've noted that there's a demand zone over here, all right? And then the other thing that we noted is this, in terms of the way the traders are feeling on this chart, is over here, every trader that looks into trading support and resistance, they find this place as an area of support, okay? And when they find that place as an area of support, when price hits, the price went up, they buy over there. Imagine significant amount of buying goes on over here. And if you buy over there, the one key thing that you're going to be thinking of is you need to put your stop to protect your account capital down here, okay? Price comes here again, they buy again, another stops for some other set of traders. Price comes down here again, they buy again, more stops for some other set of traders. Price comes down here again, they buy, another stops for some set of traders, all right? So underneath here, there is a lot of stops. Over here again, stops for so many traders. It is just natural for someone that is sitting in on his hand without trading to see it clearly that stops over here, stops over here, stops over here, stops over here. And with all these stops, it is just so natural to play it. And what I mean by playing it is this: by going below these prices and trigger all those stops, so that some weaker hands that are buying this early without coming to this zone can be taken out of the of their trades. All right. When that happens, that will give opportunity for two things. One thing you need to always constantly remember is as a trader, you want to buy the cheapest price, okay? But where so many people are buying right over here, that's not the cheapest price. To them, that becomes the cheapest price. But how did we find our own cheapest price? We find our cheapest price from that move that break the previous structure. That is where naturally was considered as cheap, right? Because this is the low that occur before we make a new high, all right? And that is the cheapest price, okay? Rather than be thinking of what everyone is